Okay, hi guys, we are going to discuss company accounts. Let me first write down the 6 units that you have in company accounts. Okay, the 6 units are: one is issue of, what is the first one, guys? Issue of shares, forfeiture, reissue. Then you have issue of debentures, and we have the theory, introduction to company accounts. These three were already there in foundation. Okay. The next three additions, if you see, what are the three new additions? They have given bonus and rights issue, redemption of preference shares, redemption of debentures. These were three chapters, separate chapters in CA Inter, removed from Inter and added to foundation. We are going to discuss all of this. For those who are watching recording, these three topics, I am going to do this now. We will go one by one, you will see the flow. These three foundation topics, recording is already available. You can just check out for the description of this video or find it somewhere. The source is there for you, you can see this. So these three is foundation, already it's covered, recording is there, you can see that. I am only mainly focusing on the new additions over here. Is that fine, guys? Hello? This recording is there, you can go watch the recording. Sweta also confirmed that I have taken. Okay, I will somehow find the recording, I will ask the team, somehow I will search and find it. Okay. Now I am going to take these three. Now, sir, can I learn these three topics without learning these three? Yes. Okay. To an extent you can learn. So we will first now target on bonus and rights issue. I will focus on that small easy area, 4 marks if it comes in exam. Okay. So these sessions will be for these three topics, and these three you get the recording. Giving context for those who are watching recording in whichever attempt you are watching, June, September, Jan, whatever, everything will be available for you. This is for you guys. Recording, I am talking to future people. Okay, again that time I can't take. Okay, fine. Now, bonus and rights issue. We are going to target bonus and rights issue. These two are also separate concepts, no relationship with each other. Separate concepts in the same chapter. That's it. Okay. Section 63 of the Companies Act, Section 62 of the Companies Act. Fairly easy, pretty easy in terms of application and doing sums. We need to first understand why company is doing a bonus issue. Let me do bonus first and then I will go to rights. Okay. What is bonus issue? Okay. Let's take a small balance sheet of Infosys. They have share capital 100, reserves and surplus 200, creditors 100, balance sheet total is 400, fixed assets 300, current assets 100. Are you following, guys? Now this company wants to make a bonus issue. Sorry, they are making a new issue. They are making new issue of 50 rupees shares. What is the entry for new issue? Bank account debit to equity share capital 50. No application, everything fully in capital, guys. Direct entry. Okay, that's what happens in real life. So I will add here 50, add here 50. My balance sheet total now becomes 450 on both sides. Correct? So whenever I make a new issue, asset side cash will go up, liability side share capital will go up. What is bonus issue? Bonus issue is basically, first I will tell you what it is, then I will tell you why we are doing it. Bonus issue is basically shares given for free to the existing shareholders. So you will again get shares to equity share capital. How much? 50. But what I will debit? I will not debit bank. I will debit reserves and surplus account debit 50. So how my accounting will now look? How accounting will now look? Follow carefully. Same balance sheet. Same balance sheet. Balance sheet total was 400. Now reserves is reducing by how much? 50. So it becomes 150. Capital is increasing by 50. It becomes 150. Balance sheet total remains at 400. So in this, asset side will remain the same. Liability side also total will remain the same. It is only a reclassification within the shareholders' funds. Reserves are converted to share capital. Why, sir, I will do that? Why am I giving that? This is the accounting. So everybody understood the journal. My entry will be reserves and surplus account debit to equity share capital. I will come to the detailed entries in 5 minutes. Okay. This is the effective entry. Yes. Correct. I'm coming to the detailed entries in some time. Sir, which reserve can I debit? There is some guidance. I will give you proper notes for that. I will give you notes. Understood what is bonus issue? Why? Why will I do a bonus issue? What's the point of doing bonus issue? To increase share capital, I can do fresh issue, no. To give incentive to the shareholders. Let me give an example. Reserves belongs to whom? Company. Okay. I'll give you a better example. I'll give you a non-related example and then come to related example. Okay. Let's say father is there who has 10,000 crores of property. Son has 0 crores. 0 he has property. Nothing. He didn't study anything. He is just roaming on the road. So he has 0 with him. Okay. But eventually, how much will son get? 10,000 crores. Someday, either upon the death of the father he will get, or whenever the father is willing, he will transfer the asset to the son. But even if the asset is not transferred, this money belongs to whom? Son. Son will enjoy it. How he will enjoy it? Okay, he will go out for trips. Father will give credit card, take and go. Now imagine father is having 10,000 crores. He puts son in government school, not 1 rupee for you. Okay, I will put you. You have earned by yourself. What will happen to son? He'll get angry. He'll get angry or no? What he'll do after that? What he'll do? He'll keep waiting. How I will get the money? He will keep waiting for the thing. He will get angry against the father. Correct? He might not show it openly, but he will have it inside him. But he will show in other places. Are you following, guys? Now, get back to this logic in a company. Okay. This share capital is my money. The money I have invested. The money earned by the company is reserves and surplus. Belongs to whom? Shareholders. Someday it should be given to shareholders. How it will be given to shareholders? By giving dividend, by giving cash. But imagine a company has, in our previous example, the share capital is 100. Okay. The shareholder is saying, I gave you 100 to start the company. With the 100 I gave you, you earned 200. Give it to me. What I am doing? This money I invested in fixed assets. I can't give it to you because if I have to give it to you, I have to sell my assets. If I have to give you cash, I don't have cash to give you. Father has everything in property. I can't give you cash. So, shareholder is now getting angry. Hey, my profit is not coming to me. It is being reinvested back in the business, in assets, buying this. Few years, shareholder will be fine. But as the reserves keep increasing, you will have the urge, hey, when I will get that money. But company can't give cash because I don't have cash. I have invested in long-term assets. So, to satisfy the shareholder, okay, I will convert the reserves to share capital. The legal ownership comes to you. It's like father actually transferring the 10,000 crores in son's name. Anyway, money is yours only. This money is yours. But you are not able to wait. Okay, get the transfer to you. Are you following the logic, guys? Clear? When I have lot of accumulated profits, I can't distribute in the form of dividend, I will give bonus shares. Are you following? Clear? This is one of the many reasons. There are many more reasons. One more reason is to regulate the market price. Meaning, I have 100 as my share capital. If 100 is my share capital, let's say it's 10 shares into 10. Now if I give bonus and make it 200, if it becomes 20 shares into 10. Earlier there were 10 shares, now there are 20 shares. I am increasing the number of shares in the market so that I am trying to increase the supply of shares available in the market. So price per share will come down. There are so many reasons. How the price per share will come down? Market price of a share is nothing but value of company divided by number of shares. Okay. Imagine the value of company is 100, number of shares is 10. What is the market price per share? 10 rupees. Now after giving bonus, will the company value change? No, because balance sheet total remains the same. So this remains 100, but number of shares now became 20, 10 plus 10. So now market price will become 5. So by issuing bonus shares, I will reduce the market price per share. Purila sir, how will market price come down? By increasing shares, basic economics, you are increasing supply, so price will fall. This and all is why bonus issue. When you will be tested in this, when you go to articleship, sir, for foundation, I don't want to know all of this, sir. I am giving you concept. For exam, I want to know what is relevant. Okay, fine. You know what is bonus issue now. You know why bonus issue. But exam, he will ask journal entries. That is what I am going to teach you perfectly. Okay. So, the first journal entry will be reserves and surplus account debit. How you do share application, I will write to bonus to shareholders account. Second journal will be bonus to shareholders account debit to equity share capital. Are you guys following? Understanding? Bonus cancel. What is the effective entry? Reserves and surplus to equity share capital. Only 2 entries for bonus issue. How many entries? 2 entries. Below this you write a note. Which reserve can I use? Can I use all reserves? Can I use revaluation reserve? Can I use capital reserve? No. Section 63 of the Companies Act says you can use only a few specific reserves. What are those reserves? Okay. First, you can use only CRR. Second, securities premium. Third, free reserves like P&L, general reserve. The reserves that you can use is only CRR, P&L, SP and free reserve. What is it? CRR, securities premium and free reserves. Are you following? Not every reserve. Sir, what is CRR? Capital redemption reserve. That concept itself is a 30 minutes explanation concept, not relevant at foundation, little heavy. If you are still interested, just search in YouTube, what is capital redemption reserve? You will find my video, go see that. That is the most watched. I don't know how it became most watched. That became the most watched video. So you will go find that. It has some 15,000 views or something. I don't know how it came itself. Some old video in my house I recorded. It started trending on YouTube for this topic, whatever. So you go watch that. Okay. Not relevant at foundation. It's a beautiful concept for inter. We will deal all of that in inter. Exam ko what I should remember, sir? First entry, reserves and surplus to bonus to shareholders. Next entry is bonus to shareholders to equity share capital. In this, you should not write reserves and surplus. I should write the respective reserve. Which reserve I can write? Either CRR or SP or free reserves. In the same order. First use CRR. If CRR is not available, then use SP. If SP is not available, then use free reserves. In the same order of ranking. You can't use randomly how you want. Okay. Are you following, guys? With this, let us straight away do the sums for bonus issue. Sorry. I think we have only 4 illustrations in this chapter. Yeah, we have only 1 or okay. And write one more note I will give you. Okay. One more note. Again, it's a legal provision. I'll explain in interclass. Not relevant for foundation. Memory is enough. Above securities premium can be used for a listed company only if the same is collected in cash. Only if the same is collected in cash. Only if the same is collected in cash. Yeah. Following, guys. That means what? Securities premium can be collected for a listed, can be used for a listed company only if it's collected in cash. Let's look at the entries. Only 2 journal entries, guys. Illustration 1. This and all comes in exams. Somewhere you should pray to God. Thank you. This and all easy chapter. Bonus, rights is one easy chapter. If it comes, you are just lucky. Following items appear in the trial balance of Bharat Limited as of 31st of March. What are those items, sir? 40,000 equity shares of 10 each. How much? 4 lakhs. Then they gave CRR, SP, collected in cash, listed company. I can use. Are you following, guys? Then general reserve 1 lakh 5, P&L 50,000. Perfect. The company decided to issue equity shares bonus at the rate of 1 share for every 4 shares held, and it is decided there should be minimum reduction in free reserves. Even if this line is not there, first use CRR, then use SP, then only free reserves. How many shares they have? 40,000. They are giving how many bonus? 1 for every 4 shares. So I will do 40,000 into 1 by 4. How much you are getting? So 10,000 shares. Each share face value how much? 10. So bonus is how much? 1 lakh. I am going to give bonus of 1 lakh. From which reserve? First I will use CRR. I will use 55,000 first. Then you will use SP 30,000. Then only you can use free reserves. So what is the entry? Look at the entry, guys. Just like how I just told you now. CRR account debit 55,000. SP account debit 30. Converting reserves to capital. Reserves are converted to capital. Third reserve, which reserve? General reserve, balancing 15,000. 2 bonus to shareholders, how much? 1 lakh. Next entry, bonus to shareholders to equity share capital 1 lakh. That's it. Same 2 entries what we did. Are you following, guys? Instead of general reserve, you can also use P&L. That is not an issue. But first I told you is what? CRR. Where you will lose marks. So you can't write SP first here. In journal entry itself, the first debit should be CRR. Because law says use CRR first. Are you following, guys? Easier. Second sum. Okay. Same way, 4 journals. And then this third sum. Yeah, third is also bonus only. And then I think fourth is rights. Correct? No, fourth also is bonus. Sorry? Oh, separately is it? I think there's only 1 or 2 illustrations. Only 1 illustration. Yeah, okay. No, not an issue. Let's do bonus. Let's try to finish all the sums. Pretty easy, guys. Illustration 1 is easy. Let's go to the next one. Okay. Let's do illustration Yeah, we can do illustration number 3. I'm just taking it in random. Following notes pertain to balance sheet of Solid Limited. Look at the same values. Authorized share capital is 11 lakhs. What do you mean by authorized share capital? Total share capital that company has. What do you mean by issued and subscribed? That is the one which is going to come in balance sheet. Preference shares 80,000, equity shares 7 lakh 20. I am only bothered about equity shares. Bonus means. Then reserves. Look at that. General reserve, revaluation, SP collected in cash, P&L. What all reserves I can use for bonus? General reserve, SP, P&L. Correct? I can use CRR, but is this question having CRR? So I will not use it. Are you following, guys? Clear? Okay. Next, secured loan they have given details. Fine. Come down. As of 1st April 2022, company has made a final call of rupees 2 on the 90,000 shares. Look at the question. Company has 90,000 shares of 10 each, 8 paid up. So I am making final call of 2. That you already know in share capital chapter. So I will do 90,000 into 2, final call. After money was received on 20th April, thereafter company decided to capitalize its reserves. That means by way of bonus at the rate of 1 share for every 4 held. So how 1 share for every 4? How many shares I have? So my bonus will be 90,000 into 1 by 4. How much you are getting? 22,500. Are you following, guys? So I have to pass what all entries? You have to pass entry for call and you have to pass entry for bonus issue. So what is the entry for call? Share final call to equity share capital, bank account debit to share final call. What is the amount here? 90,000 into 2. So all the 4 will be 1,80,000. But I know it's going to be lazy, but you have to write share final call to share capital 1,80,000, then bank account to share final call 1,80,000 along with the date, because date of call question la 1st April is date. I received on 20th of April. Date of call and receipt. Write the date, write the narration. Clear, guys? Then after this bonus issue, we already decided bonus issue is 22,500 shares into 10 per share. So how much? 2,25,000. Fixed reserve to take first. Securities. Next, my wish. Either general reserve or P&L. That is my wish. Between general reserve P&L, there is no restriction. Look at the entry. Securities premium account debit 20,000. General reserve account debit 1,60,000. Balance whatever is left is P&L 45 to 2,25,000 to bonus to shareholders. Bonus to shareholders to equity share capital 2,25,000. Are you following, guys? How many of you studying this chapter first time? Understanding? Easier. So what is new is nothing but just these 2 entries. That only you are seeing in every sum. Reserves to bonus to shareholders to equity share capital. Easier. Following, guys? Clear? Illustration 3, this is same way. Okay. One important thing we have to check in every sum. Thank God I remember. Now, what is the share capital after bonus issue? It was 90,000 before. Correct? Plus how much now? 22,500. So total 1,12,500 into 10 is how much? 11,12,000. No. 1,12,500 into 10. 11,25,000. Let me repeat very important part which most of us miss. Even I just missed. I saw in solution. I am clarifying. Number of shares after bonus issue. Before it was 90,000. I added how much? 22,500. So total became 1,12,500 into 10. My revised share capital is 11,25,000. But in question, what is the authorized share capital of equity? No, equity, not preference. 10 lakhs. That means you authorized is the maximum share capital. It has crossed authorized. That means I can do bonus issue. No. Are you following, guys? So, what to do in this exam? So, that time, how to increase authorized share capital? Section 61 of Companies Act says you have to pass special resolution, alter the MOA, increase the authorized share capital. That only is given as a note here. What you should do? You do the whole sum as if bonus is given. You have to give a note. It has to be ensured that authorized share capital after bonus issue should not be less than the issued share capital. For us here we have less. In all practical problems, the authorized share capital may either be increased by the amount of bonus issue or by additional shares by excess by passing necessary resolutions. In this question, authorized was 10 lakhs, actual became 11 lakh 25. So we have to increase the authorized share capital by altering the MOA. That note you have to give 1 mark. Are you following, guys? Otherwise, what is the purpose of that fellow giving this authorized in question? Waste of space in lakhs of question papers. Correct? Following, guys? Clear? Important note to do. We generally tend to miss this. Able to follow, guys? I agree, yes, doubt. Okay. Illustration number 4. I am not going to do it, guys. Look at 4. Illustration 3. Different numbers. 1 second. Illustration 4 is same as illustration 3. Look at this. Authorized he gave, issued he gave the reserves. Last sum he didn't give CRR, this sum he gave CRR SP. Look at the adjustment. Made a final call of 2. After that they made bonus of 1:4. Same 4 journal entries. Final call, receipt of money, transfer of reserves, bonus, what to say. Why SP is? No, CRR only should be taken first. You have to take always CRR first, then SP. Here it is just one small error. You take your CRR first. No doubt in that. 100% I can tell you. Take that for the exam. CRR first, then SP. Clear? Answer will not change. Only order will change now. Because anyway, balance figure is PNL. If at all answer is changing, let it change. CRR first. Okay. Following, guys. Anybody has a doubt so far in this? Easy a chapter. Happy about the addition. That's why I removed an enter. Okay. Last question, illustration 2, little different. So we will do with this bonus is done. Whatever study math sums are done, that's enough. Practice practical problems behind. More than enough for bonus issue. No concept beyond this. It's an easy chapter. Inter also this only sums. Never you should do anything beyond this. Where he will trick us. He will tell it's a, what to say, securities premium not collected in cash, listed company. You can't use. Or he will tell, I am not a listed company, but SP is collected in, not in cash. No, see, if it is a listed company, SP should be collected in. If it is not listed, SP can be anything. It can be cash, can be kind, it's okay. So, not listed company, no restriction. You can use SP, whatever it is. Only for listed company, it should be in cash. Sir, what if question says it's a listed company, but SP is silent. They have not given collected in cash. Take an assumption. Take an assumption and give a note. Yes, doubt. Cash includes bank also. Yes, cash includes bank. Somebody is asking a question. Sir, can we expect a question with all issue, forfeiture, reissue and bonus? Maybe. It's just mix of entries. Maybe they might ask. We have to wait and see because this is the first attempt for us. We have to wait and see. Yes. What they will mix, I will tell you. Okay. That we will do in the ending. Bonus, redemption of preference shares, redemption of debentures, combined sum is possible. It is there also. That I will do it. That combined sum is there in redemption of debentures chapter. Redemption of debentures is one scary chapter, guys. It was one of the difficult chapters in Inter itself. Inter itself, people will get scared. So when I get there, I will take it for you. We will discuss over there. And then they can mix all these three. So we have mixed sums. I will do it when I go to redemption of debentures. Bonus, dead easy. Rights, easy. Preference shares is medium. Redemption of debentures is a little bit tricky area. We will spend 2.5 hours and try to solve there are only 4 sums in book. We will learn those 4 sums. Let's do the last sum and close bonus in this video. Past journal entries. See, company's account only 6 units. How many marks for exam? Weightage 20 to 25 marks. 20 to 25 marks, minimum 20 marks, guys. I can go up to 30, but median 25 marks. Only 6 units. So it's easy to score. Okay. The only difficult area is redemption of debentures. Rest all 5 are dead easy. Okay. A limited company with subscribed capital of 5 lakh consisting of 50,000 equity shares of 10 each, called up as 7.5. That means what is the last call? 2.5 is last call. A bonus issue of 1,25,000 declared out of general reserve to making the shares fully paid up. Carefully follow this question. Slight change, but it's the same. Let me write the values. Existing, what is the breakup of 5 lakhs? 50,000 into 10. But is this fully paid up? No, this is not fully paid up. This is only 50,000 into 7.5. How much are you getting? 3 lakh 75,000. So to make it fully paid up, how much should he pay? 2.5. So 50,000 into 2.5 is how much? 1,25,000 is the final call, but I am not doing final call. What is the entry for final call? Share final call in this sum, account debit 1,25,000 to equity share capital, same 1,25,000. What is the next entry? Bank account debit to share final call, same amount. Correct? Only changes, I am not collecting money. Instead of bank, I will debit. Final call is given for free. You don't have to pay the final call, but I will make it fully paid up. Are you following, guys? So you are not giving final call, but I am converting partly paid up shares into fully paid up shares in the manner of bonus issue. So other entry, instead of bank, I will debit the respective reserves. Are you following, guys? Now look at the 2 entries. General reserve to bonus to shareholders. Share final, no, they wrote reverse, guys. This will be the first entry. Share final call to equity share capital 1,25,000. Next entry will be what? Reserves to bonus to shareholders. Are you following? That's what we passed. Correct? Are you following? Look at that. 1 second. No, it's not an error. I'll just explain. What he has done, same entry, he has done detailed by using bonus. So what they are doing, normal entry for bonus is what? Reserves and surplus account debit to bonus to shareholders account. This I will write for 1,25,000. Next, the share final call entry. Share final call account debit to equity share capital. How much? 1,25,000. Are you following? I'll tell you what we did. Last entry will be bonus to shareholders account debit to share final call. What I showed you here and this is just detailing of entry. When I taught you the concept, what we did, share final call to equity share capital, and I did reserves and surplus account debit to share final call. Correct? This is what I wrote here, guys. Share final call to equity share capital, reserves to share final call. With this, are you understanding the logic? With this entry, I understanding the logic of. So this entry and this entry is knocked off of same. Share final call to equity share capital, share final call to equity share capital. Now look at this entry. Strike off this bonus and this bonus. What do you get? Reserves and surplus to share final call. Are you getting it? He is doing the same entry, routing it through bonus to shareholders. So both entries are the same. ICA follows this. We will also follow 3 entry model. Are you following? Clear, guys? Understood the 3 entries for 1,25,000. To conclude this chapter, let us do second. They are in different method. Same thing. What method we did? Okay. Now, can you try the second part, because this chapter everything I did, nothing you guys did. Can you try this last and then we'll wind up bonus issue. I'll brief the question. A Limited having fully paid up shares of 50 lakhs consisting of equity shares of 10 each. Fully paid up shares already. Having general reserve of 9 lakhs, resolved to capitalize 5 lakhs out of general reserve by issuing 50,000 shares of 10 each. Each shareholder get 1 share for every 10 shares held. Can you pass the journal entries for this? How many journal entries? 2 or 3? If it's fully paid up shares, 2 entries. If it's partly paid up shares where bonus is given, we are passing 3 entries. Okay. Dilip Babu following up. Sure. Done, guys. 2 entries, pass it. Finish. Cross check if these are the 2 entries. General reserve to bonus to shareholders, bonus to shareholders to equity share capital. Are you getting it correctly? Done, guys. Perfect. Okay. So with this, we will wind up bonus issue. Thank you. That's it. Bonus issue for exams. If you learn this, more than enough.